Well, g'day there traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Wednesday afternoon market recap, a very important recap, which it is. Today we saw a very volatile session of trade collectively across the board up until about 2:30 p.m. The markets were looking very, very strong and very healthy. We had seen that of a white long day candlestick, that very similar to a long day Morobozu setup. However, the last 1.5 hours was a very different story. For the Dow Jones Industrial Average, we saw a 500-point reversal. The markets collectively absolutely taking to the downside. And what has essentially been left as at the close on Wednesday is that of another consecutive shooting star candle, very similar to how we rounded out the week last week. Now, I spoke about this over the weekend in Pro. I also put out an update yesterday when we started to see the first signals of true selling, which took place on Tuesday. This is almost, and I very rarely say this, but this is almost guaranteed at this particular point that you should be considering and expecting to see that of further downside price action. Maybe not essentially first thing on Thursday, maybe not potentially on Friday, but over the next 1 to 2 weeks, we should see these markets push on back down and retest the lows that we established earlier in the month of February. My targets on the Dow Jones Industrial Average are down here at 24,000, down to potentially as low as 23,500. Once we get down to these areas, these are going to be the positions where you should be looking to, or at least the locations where you should be looking to begin entering into diamonds, SPYs, or Qs collectively. Not to mention a lot of individual trade setups that are still collectively bullish, but have to still go through the right correction that essentially we set off once we peaked all the way back here in the month of January 2018. So this is a process. We're going through the ebbs and flows, the natural bounce, which follows that of a correction. Essentially what we've done is we bounced about 50% of the move, or at least that general sell-off that we saw. And this is the location generally where we see the market roll and retest that low that we established earlier in the month of February. I've been speaking about these Bollinger Bands and when we use them. This is a very important, again, learning opportunity for people around the world. Generally what happens is when you pull away from the lower Bollinger Band in this context is that you see a rise back up into what is then the declining 18 simple moving average, which is the midpoint of both the top band and also the lower band. Now, if you're just thinking about the 18 simple moving average, just cast your eyes to this figure on my screen. It's coming in at about 25,195. If I bring up the exponential moving averages, you can see more or less they are very close to that 18-day simple moving average. So again, we're starting to see a confluence of resistance roughly in the same location, coupled with Fibonacci retracement levels that equate to roughly 50% of this entire sell-off, all right? So this is where essentially X marks the spot. We have highlighted this area like we did at the 26.3 resistance target that we had set up rounding out the month of January. This has all worked out quite well. The next phase is the back test of this support area. Now, this is not only conducive to that of the industrial average, it is also very relevant and pertinent to the S&P and the NASDAQ too. So as you can see, once again, you've got this very pronounced upper wick. It's coinciding with the wick we saw as we rounded out the week last week. Again, a variation of a shooting star candlestick. This is looking like we're beginning that of a sell-off and the retest of its respective area. 2,600 on the S&P 500 down to 2,550. It'll be interesting if we can actually overshoot this. I personally don't think we are going to close and then fall below this area. I think we are going to set up that of just a volatile sort of market condition as we allow those oscillators to reset, not only on the daily time frame, but also on the weekly time frame. You can see for yourself, this is the Dow. We're only just starting to see these major crosses take place, but most importantly, it is that on the MACD, the moving average convergence divergence on the weekly chart, which has given us a definitive cross to the downside. So this coincides with that of generally a sideways moving market. It doesn't necessarily mean that of a major sell-off, but there is a good chance that once we allow that weekly oscillator to reset a little bit further, it will, of course, reconcile with lower prices down here. And this is going to be the formation, the base, which this macro long-term bull market is going to have to bounce off from and ultimately eclipse this high before we can say with any great confidence whatsoever that this macro bullish uptrend is still intact. I still assume there are going to be some fantastic buying opportunities. The problem is that you don't want to be buying at these respective resistance areas. I've said that this is most likely going to be the perimeter of the top, and this is shaping the perimeter of the bottom, upon which is going to lay the blueprint, the framework that we can sort of act on and act off as technical swing traders moving forward. So allow this to shake out. We've got another shooting star candlestick. You can see the Nasdaq has been the strongest of the three markets, relatively speaking. We have seen a collection of relatively strong intraday moves, but they haven't been able to hold. You can see all of these upper wicks. So again, the writing is on the wall. I'm not sure if we're going to see it on Thursday. I'm not sure if we're going to see it on Friday, but this is definitely indicating that we are set to see lower prices. And it's essentially what I've been warning about since we based after this most recent sell-off. So this again is just the market movements, the ebbs and flows of what we expect, and it is more or less playing out. It has taken a little bit more time than what I originally envisioned. Generally, when you get these reversals off from the lows, we can even sort of hold these levels and not necessarily even accelerate away from these support areas as quickly as what we've done. It's all a variation. It is really just a distinction without a difference. It all adds up. The sum total is essentially the same. We should see the back test of these support areas, and that's what I believe we're going to see. Now, if I can move into, or actually before I move into the individual trade analysis, very important continuations in gold and silver. You can see gold is still pulling back down another 60 cents more or less today. Pay attention to the support area down here at about 124.60. I mean, I highlighted this yesterday. I've been very vocal about this area. If we can see gold hold roughly around this rising 50 exponential moving average, if not a little bit, if I can bring up the right template, as long as we can hold above the long-term simple moving average as well, this is going to be a fantastic buy, or at least a long-term trend type of play. If we see the US dollar, which at this particular point, it's no surprise that it's strengthening, given, of course, the weakness in commodities. Once this correlates and moves back up to roughly 92, that's what, that's generally the location that I'm looking for. You can see this red rectangular box on my screen. Once this matches up, that will be very close to the ultimate top, or at least that intermediate top in the US dollar, and potentially that intermediate low that we are set to put in for gold and silver, and probably for other commodities as well. Now, having said that, let's leg into a bunch of individual trades. Now, over the weekend, we didn't really have all that much in terms of trade opportunity. The reason for that was because simply the structure wasn't there. We can describe, I guess, the narrative and the situation of the market, but even being able to do that with relatively high conviction, it may not actually align all that well with individual trade setups. And that's where we sort of found ourselves over the weekend. So a lot of this is what we've been expecting, but at the same time, it's not something that we can really sort of navigate professionally as swing traders if we are going to obey and be disciplined when it comes to actual trade plans and structures and the ways in which we differentiate intelligent trading behavior as opposed to just pure speculation. So you can see for yourself with Apple anyway. If I go to the weekly chart, we are down $1.43. Above all else, we are just respecting this resistance pivot. Not all that much groundbreaking information there on Apple, but again, it is what we have been speaking about. The same is true for Amazon. This was looking quite healthy intraday. The narrative changed. We do have another high wave spinning top. I mean, there's a chance we still break out if the markets do rally, but given, of course, the breakdown, or what appears to be a breakdown in the broader financial markets, it doesn't make a whole lot of sense that we are going to see many, if not any of these companies break out above their resistance areas. It looks as though they are going to set up potentially double tops, or if not, just essentially price in that next basing area that we're going to see these individual companies bounce off from as we move most likely into the month of March. Now, again, continuing the discussion, Boeing Airlines was looking quite healthy. Surprise, surprise, what do we have? Another shooting star candlestick. So there was a reason why I moved this trigger up and why it is dashed. It's because we've been waiting for false signals. And essentially what we have right now is the false signal at 365. I said, hey, over the weekend, 347, this is a purely illustrative example, but you can, almost assume that Boeing Airlines is going to close, break below this figure and potentially move back down to about 330, where again, that next pretty decent bullish trade is going to stem from. Now, again, the same is true for Baidu. Baidu today closed the open window. Have a look for yourself. Pay attention to the low. L equals low of this candlestick here, 252.80. Okay, just remember that, 252.80. Now pay attention to the high of this candlestick here, and it is 252.97. So we overshot it by 17 cents. So what this means is that we have now closed the gap. And as we've closed the gap, we've just set up once again that of a gravestone doji, almost out of a shooting star candlestick as well. So I mean, that is a very bearish candlestick at a resistance area, closing the window. This is a pretty decent short trade setup on Baidu. Now again, this is technically counter trend to the overall macro backdrop of the broader financial market indices, but we can bring this trigger up 241.63, very similar to that of Boeing Airlines. Just understand that with this comes additional risk. I don't like to trade counter trend, so this is just going to be for illustrative examples. I will not be placing these trades in my account, but you can follow along and just see how they map out as we move into March, because there is a high likelihood that we are going to see some of these stocks fall on back down to their past support areas that we have established a number of weeks ago earlier in the month of February. So continuing on with Caterpillar, another shooting star candlestick. It looks like we have a little bit of a bear flag here, and it's trying to resolve itself back down into support. You can see the general narrative of a lot of these individual companies. You've got COP, which is holding up just above this trend line. This is fantastic. I've been speaking about this bullish trade setup. This is going to shift as I move into Pro this week. So again, there's going to be a lot of, or at least a decent trade set up immediately with COP. We are going to adjust this now that we have the structure that we've been calling for. Absolutely fantastic. Also today, CVX, a very volatile day. You can see why I positioned it at 118.33 and why I wasn't even fooling around with it as low as 112. You see this upper wick again, very strong sell side pressure. So this is just forming the perimeters once again of where we're going to set up that individual or even potentially bidirectional trade setup. I'm not really all that aggressively bearish on CVX. These are going to be bounce trades once the market stabilizes at those support areas. You can see also CVX is moving into relatively oversold territory. Allow this a little bit more time. I would not be looking to short it. This is going to be the bounce play, and in due course I will be able to bring this trigger down for you, and I'll speak more about that over the weekend. Continuing into Google, unlike Baidu, it hasn't filled the open window yet, or it hasn't closed the open gap, but we do have another high wave spinning top candlestick. You can see that very pronounced upper wick, that very pronounced lower wick with a relatively small real size candlestick. So this is just showing you the indecision, the short-term bifurcation of traders when it comes to a lot of these individual companies, and also the broader markets as well. So again, I was talking about Google yesterday. We were saying how there was no real trade setup. It's essentially no man's land. You can see for yourself today's candlestick really, just shows that, what I spoke about yesterday in terms of no clear direction. This is all hazy. Again, you're going to see some pretty volatile movements in individual companies, and Google, highlights that. It truly does at this particular moment. No real trade there. The same is true for Goldman Sachs, another upper wick, another shooting star candlestick at resistance. It's not an ideal short. It is very messy. It's very choppy. It's something you want to leave alone, and what is most likely going to happen is that you're going to see a number of Bollinger Band squeezes set up on a lot of these companies towards the end of the week, which is going to be a talking point as I move into that pro class as well. Now, IBM, you can see the reversal taking place. Shooting star candle, hangman at resistance, another shooting star candlestick, upper wicks all over the place. Market is relatively weak. Pay attention to this. IBM should fall back down to 150. If it holds this area, this is going to be another bounce play. Even potentially this week, if we do see, for instance, the market's actually aggressively selling off on Thursday and Friday. Now, continuing this into Netflix is still unable to break above its respective high. I've been following this very closely like a hawk. Today, we have, again, sell side resistance holding at this resistance point. Pay attention. We haven't seen anything of a reversal yet, but it wouldn't surprise me towards the end of the week if we actually see a crack of what is resistance still holding, and we definitively close below about 270, this candlestick over here, which dates us back to Friday last week. If we get a move below that, it should take us back down to this green rectangular box, which is that of support, okay, moving forward. Now to close with, and in summary, we have Tesla. Tesla has gone through the bounce, all right, now it's starting to roll. Consecutive series of high wave spinning top shooting star candlesticks, pretty much early reversal signals across the board over the past 3 sessions of trade, respecting this resistance area. We're stuck between resistance and support. This is why I've been spending so much time in the last 2 weeks of pro really trying to get the point across that sometimes it's best to essentially sit on your hands as a technical swing trader and to allow other people to fight out the short-term direction of the market and these individual trades. Now is not the time to be jumping on board with macro bullish trades or thinking that the long-term bullish trend is going to continue. We're going to have to go through, of course, the ebbs and flows of the volatility. You're going to see the volatility index continue to spike off from those resting areas. We saw that today, and that's going to coincide with really brash, generally unwarranted conditions that really aren't all that conducive for technical swing trades, or at least the technical environment that best suits us and fits us as technical swing traders. So allow, of course, those intraday traders to battle it out. We'll come in at the end once one side is exhausted, and then, of course, we'll play the long-term swing or the longer-term swing once that other side capitulates, and we see the resounding, overwhelming winner between that of the bulls and the bears, and I do believe the bulls are going to win that battle. It's just going to be at lower prices ultimately for the foreseeable future. All right, so again, if you have any questions, please email me, success@pivotpoint-trading.com. I'll be back with you again probably tomorrow. We'll see how the market reacts to the session that we just closed as at Wednesday. It's going to be very interesting to see whether or not we actually see some true directional movement to the downside, given, of course, all of these warning signals that have been setting up really since Thursday last week, which is coinciding once again with this doji candlestick dating back to the midpoint of that very abrupt crash that we saw to welcome in February 2018. X marks the spot, an abundance of resistance confluence that we are retesting. We're finding resistance, we're finding selling, and now it looks as though short term the bulls are going to throw in the towel. We're going to see these markets fall a little bit lower, and then that's where we'll be looking to execute a number of positions moving forward. All right, so on that note, everyone, have an enjoyable Wednesday evening. I'll be back with you tomorrow for some more market recaps. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.